Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Welcome to another video on your channel Profit and Equities. In this video, we'll be talking about a fundamentally strong, non-speculative stock where the promoter has silently acquired shares worth rupees 112 million. Now this stock has significantly corrected in the recent past and could well present an opportunity. Now friends, if you have not already become members on our channel, please click on the join button below and follow the steps. This entitles you to member only privileges on our channel Profit and Equities. This includes being added to our Telegram and WhatsApp groups where we discuss stocks and have individual portfolio reviews. Also friends, if you have not already subscribed to our channel, please click on the red subscribe button below. This will help you get notified whenever we upload a new video. Please watch this video to know more about this stock. Now the company in question is Escorts Limited, which is available at rupees 603 and the face value for it is 10. The symbol for it is ESCORTS. Now Escorts Limited is an engineering company which offers agricultural tractors and construction equipment. The company's segments are agri machinery, auto ancillary products, railway equipment, construction equipments and others. Now sour industry sentiment and weak guidance have weighed on Escorts stock price. It has hit a 52-week low of rupees 541 on May 16, plunging from close to rupees 957 on June 1, 2018. It has since recovered slightly, trading comfortably above rupees 600. The Nanda family-led promoted entity, Har Prasad and Company, bought shares worth rupees 112 million in mid-May. Overall, promoters and top management bought shares worth rupees 152 million between February 2018 and May 2019. In addition, 1,39,817 shares were transferred to Nitasha and Ritu Nanda in two separate off-market transactions by Nikhil Nanda a day before his latest acquisition. Amidst the internal transfer, promoter stake has remained stable at 40.8% over 4 quarters. In line with management's guidance, Motilal Oswal Financial Services had cut earning per share estimates by 4% and 5% for FY20 and FY21. They said, and we quote, "We also cut our EBITDA margin estimate by 40 basis points to factor in higher expense and operating deleveraging, leading to an earnings CAGR of just 6.5% over FY19 to 21. Overall mutual fund holding has also reduced from 5.09% to 3.23% over the past 4 quarters. HDFC Mutual Fund and Edelweiss Mutual Fund have reduced their holding from 0.30% and 0.44% to 0.21% and 0.10% respectively. However, UTI Mutual Fund has increased its stake marginally by 2.41% to 2.52%, while SBI Mutual Fund has raised its stake by 0.09% to 0.11%. Foreign portfolio investors also hold 24.6% stake in March 2019 as compared to 24.37% in March 2018. Now, as is evident from the 1-year chart, this company has been an underperformer and no major wealth has been created here. The company is available at reasonable price to earnings ratio of 15.24 and a price to book ratio which is not very expensive at 2.76. The dividend yield is 0.41%, whereas the promoter holding is on the lower side at 40.08%. Now friends, please don't consider this to be a recommendation on our part. Please go ahead and do your own research. This and all other content that you see on our channel is intended to be a piece of news. Thanks for watching, and if you have not already subscribed to our channel, please consider doing so.